Thanks for stopping by Knowledge of BizEd. This is where we'll share knowledge, helping you navigate the business world. Uh, Basically, so for example, sometimes we're faced in situations where if we just had first-hand knowledge on how to navigate the transactions, it would have been so much easier for us to help us to navigate the curveballs that that certain situation throws at us. So whether you're filing your taxes, you're thinking about investing wisely, or you just want to gain valuable life lessons, you can come here, stop by Knowledge of Biz Ed to help you stay ahead, just a little, toops ahead. So just a quick disclaimer: the information shared in our videos, or in this video in particular, this is for knowledge purposes only. Therefore, I highly recommend that you speak to your professional advisor before making your final decision. And considering that we get these housekeeping matters out the way, let's get right into the video. So let's talk investing. A lot of times we talk about investing, what is investing. A lot of persons sometimes they really just want to get their investing hat up and running because they want to make some money. But there sometimes of a handful, not necessarily a handful, sometimes even more than a handful of persons who just don't know what is investing. Yeah, they hear the term used and they use it. Sometimes we use the term loosely, but if we had some more in-depth knowledge on it, like it would have been so much better for us. So with that said, let's get right into the video. What is investing? So investing refers to the act of allocating or monies or even our resources into financial assets, business or ventures with the expectation of generating return or some form of profit. So whether it is investing, whatever it is that we decide to invest in or aim at the end of the day is to get some form of inflow over a period of time. So yeah, we talk about investing, we get the definition, but let's talk some more about the types of investments. So investments can take various forms. You have investing in stocks or shares, and this is where when you invest in public listed companies and you get some form of share in that business. So you get some form of ownership. You can either be ordinary shareholders where you have the right to vote and you have the right to dividends, or you can be a preferred shareholders where regardless of whether or not the company is profitable, you have some form of dividends in that business to get at the end of the year, but you don't have any rights to vote. You also have investments in the form of bonds, and bonds are basically a loan to a company. So, for example, we have Barita, who now has a bond opening. Barita is a public listed company. They're a stockbroker, but they also have they're an investment firm. So they put out their bond, and they're saying, okay, then you have some money, you want to invest it, you can lend that money to us, and when we will give you a certain amount every quarter, every year, or whatever it is. So sometimes you find that bond, they'll come with tranches. Tranches are different options. You'll have, for example, with the Barita bond that's now out, they'll have like a tranche one, it have 500 US dollars, and they have the Jamaican dollar tranches as well. So these bonds are usually very specific. So you're not an owner in the company, you're just a lender. So at the end of the whenever the bond mature, they call it the maturity date, you'll be returned your principal, which is amount that you would have invested. And of course your gains would have been based on the coupon rate, which that's a term that they use in bonds. The coupon rate that you're given, whether it's a quarterly, annually, and so bonds usually have specific tenure. So whether it's a 1 year bond, 2 year, 10 year, 5 years, whatever it is, it's usually clearly specified. Another form of investment takes the form of real estate. Real estate is usually physical properties, which takes the form of land and buildings. You have commercial investments in real estate, and then you have residential real estate. If it, whether it is you're buying, you're renovating homes for resale, or you have a nice home that you rent it out, or for monthly rental income, or you have an Airbnb, whichever it is that it takes the form. Real estate usually is a form of investment. You also have unit trust, or in certain jurisdictions they'll call them mutual funds, and this is where a portfolio manager will invest into a group of different forms of investment products. So, for example, you'd have stocks, bonds, real estate, so different form of equities in that mutual fund, and that's where you would get your returns. Also have investment in private business. So you have startups, you'll have a business that you might be a partner in. So that's another form of investment where your aim is really to get a profit. Of course, investment with investments, there are different risk, or the type of risk that we take heavily depends on our risk appetite. And risk appetite refers, in this context, refers to the level of risk an individual, in our case, an individual is willing to accept in pursuit of financial objectives. So you have certain financial goals, and you want to take these, you want to take risk, and your risk appetite really is the risk that you're willing to accept, and it reflects the balance between